once you're comfortable talking about money, it makes it easier for you. The world revolves around money. Salvation is free, but you need the money to spread it to people. Elon Musk, one of the richest guys today, his wealth is tied to Tesla shares. Even Bill Gates, that we all celebrate, Warren Buffett, their wealth is tied to their shares.
But why stocks?
Nobody gets rich by just having physical, tangible cash. Investing in stocks, you are investing in businesses. Any stock that you are buying into a company actually. Stocks is not like something abstract, it's something real that you can see.
Let's say that I have $1,000 in the account. What percentage would you advise to at least put into stocks?
If that is the only money that you have, obviously you shouldn't just put everything in the stock market. Have some investments in stocks, have some investments in fixed income, have some investment that's just locked in savings for emergency funds. There's Nigerian-based stock that I have currently that's gained over 100%, and I bought it this January. As at last I check it is 130%.
Those fundamentals, what you think should be important for anyone diving into stocks?
Go get knowledge. That's where everything starts from. Know your risk tolerance. Invest in companies that are stable.
Is there any part of stocks that involves your gut feeling?
Gut feeling is applicable to everything in life, not just investments. Even making money, even finding a partner.
Maybe nobody has asked you on an interview before, why get married early?
What's up, my smart friend? Before you jump straight into this episode, there are 3 boxes I'd love you to check while you watch. First things first, please make sure to hit the subscribe or the follow button down below, because the more we grow, the bigger guests we can approach on this platform and the more value we can bring to you here on the podcast. Second, a lot of friends always reach out to me and say something like, "Hey, Arrey, I really did enjoy this particular segment of this episode." What I want you to do, if you get to a point like that, pick up your phone and send this to a friend and say, "Hey, check this out between 10 to 15 minutes. There's something very important I'd love you to see." Number 3, please make sure to check out the links in the description for very helpful resources. You're going to find the link to join the Smart Club, which is my private mentorship club for friends who want to learn and master a high-income digital marketing skill. Whether your goal is to build your personal brand, become a freelancer, or get a job in digital marketing, the Smart Club is going to be the right place for you. Also, you're going to find the link to join our 21,000 Smart Friends on email, where you're going to receive an email from me once every week. Plus, down below, you're also going to see links to connect with the guest. So please make sure you tick those 3 boxes and enjoy the rest of this episode.
When I listened to you talk and when I followed you, I felt like this was going to be the right conversation for my audience. For those who are very new to you, so you are Nathanael Disu, personal finance coach and a finance market analyst, and you are the investment research analyst at ARREY West Africa. Going through your timeline, going through your portfolio, you have educated thousands of people to be financially literate and personally trained hundreds to buy and invest in the stock exchange market. And so first thing I wanted to ask you is, what are stocks generally? Because that's a big question that everyone would be asking in their minds.
Okay, thank you very much, Arrey, and good to be on this platform today. So stocks generally are a piece of a company. So basically, that's just what it means. So when you invest in stocks, when you're buying shares of a company, you're buying into the growth of that particular company. So whenever you buy stocks of a company, you become a shareholder of that company. So obviously you are not part of the decision makers, except if you buy majority stake, but you just have a presence in that company, and any activity that goes on in that company, you are privy to those information. So basically, stocks is just buying part ownership of a particular company, of a public listed company.
At this point, so some people might be asking about why stocks. I know that stocks has a lot of people talk about it, and you hear a lot of people be like, "This is it's a solid way of investment and growing your finance." But why stocks?
Okay, why stocks? People do ask me, and I do talk about it. So, by investing in stocks is you are investing in businesses. Any stock that you're buying into a company actually. So, stocks is not like something abstract. It's something real. It's something tangible that you can see. So, most companies' stocks that you see, they own products or they offer services that you can see on a daily basis. So, for example, back in Nigeria, Dangote Cement is a public listed company. You can see Dangote Cement everywhere. You can see the products. You're not buying companies that you don't see or you have no idea of what they are doing. So it's something that you can see basically. And also, stock market is a wealth creation tool. Most of the richest people in Nigeria, their wealth is tied to the stock market. their wealth is tied to the shares they own in public listed companies. Even globally, most of the virtually top test people, their wealth are tied to stocks of their company. Mark Zuckerberg is rich today because of the percentage of shares he owns in Meta. Take away Meta from his wealth, he basically has little. Elon Musk, one of the richest guys today, his wealth is tied to Tesla shares. Even Bill Gates, that we all celebrate, Warren Buffett, their wealth is tied to their shares. So nobody gets rich by just having, not like nobody gets rich per se, but it's not by having physical, tangible cash. So that's why it is called net worth. This person is worth this particular amount. So it's not like if you want to buy Elon Musk, you have to pay that amount to know. So wealth is just like the value of his wealth, how rich he is tied to this percentage. So it's a age-long wealth creation tool. It's something that's been existing for centuries. So that's why I do talk about investing in stocks.
Right. And we're going to circle and come back to some wealth creation. And because I want us to contextualize this to anyone who's watching this. And my goal is that by the time they finish watching this, they should be able to have leveled up their finances, or at least know how to level up their finances and have an action step. But I want us to circle a bit back, because I believe that for me to understand where you are right now, and especially the journey you've had educating thousands and also being able to train hundreds, it has been a journey for you. But talk to me about your journey. Let's go back. How did you get into stocks, and what was that thing that made you go, oh, okay, let me get into finance right now?
Okay, talking about my journey, I've always had a flair for finance back when I was young. So I didn't study it in the university, but it's something I've had huge interest in. So after school, that's when I picked that up. And reason behind stock market, I've known about stock market, although on the basic level that I just knew it's something, when people say, okay, how do people get rich? Where do they invest in? They say they invest in stock market. So I just knew that, okay, this is something that rich guys invest in. But when the pandemic happened, when COVID happened, virtually all the stock market went down because of the situation. So it was an opportunity for people to get into the market. So one of my friends told me that there's an opportunity in the stock market, let's get into it. So because I did had initial idea that, okay, this is where people invest in. So he didn't need to convince me. As he just told me, I just said, okay, yes, this is a good thing, let's go ahead. So that's how the journey started.
Right. And how through during this journey, are these some of the really difficult moments where you went, oh, maybe you felt like you would give up on the idea of pursuing stocks or buying stocks? Was there any moment like that for you?
There were a few moments because it's a long-term game, and initially when I started, there was no really much learning resources available when I started, to my opinion, because I started with the US stock market. So as at then, back in 2020, there was not much information as regards how Nigerians can invest in US stock market from Nigeria. So there was not much information, not many persons were talking about it. So it was something that I had to find my way personally. So I just had to learn on the job, find how to. So in the process of my mistakes, learning, losing some money and the like. So that's why I wrote the book, The Stock Market Millionaire. And that's why I also started teaching people about the stock market. That, okay, this is something people can invest in, and some persons know about it, but they don't know how to get started. They keep asking that, how can they buy shares of Apple? But it's possible. So because I've gone through it and I learned about it, I'm like, okay, let me start educating others about it, so they also know how to go about it. So that's how.
Right. Definitely, we're going to add the link to the book down below. So for everyone who's watching this, you can actually click the link and then go check it out. But before, let's go step by step. What are some fundamental principles you think anyone should know before they start to dive into the stock market and do their investments? I know that you talk a lot about them. One of some of the things you talk about, personal finance, risk, which we're going to explore. But just give me those fundamentals which you think should be important for anyone diving into stocks.
Okay, one of the fundamentals and one of the things to get to know about is that, first off, go get knowledge. So
Right.
that's where everything starts from. Because if you don't have the necessary knowledge, you would not know how to navigate your way. You would not know what to do and how to go about it. But when you have the necessary knowledge, you would be informed and you would know how to find your way. Then secondly, know that you are investing in companies. So if it takes a while for a company to fully grow, you should
Mhm.
not expect your own investment to grow ahead of the company, so to say.
Right.
So if it takes time for a company to grow, you that you are investing in that company, you don't expect your own little investment to now do magic when the company itself is still growing. So you need to be patient. You need to invest in solid companies that have huge track record of growth and success. So those are the basic things that you need to get to know about.
Right. One of the things I also hear you talked about in one of our conversations, you talked about evaluating your risk tolerance. Why is it crucial for an investment strategy?
Okay, so it's very crucial because every investment has a level of risk. There's
Right.
no investment that is risk free. So no matter how trusted the investment, there's a level of risk. It can be low, it can be medium, it can be high. So understanding your risk tolerance would help you know how to play your investment game. It will help you know the kind of companies to invest in. Because there are some companies that are really high risk, they are extremely volatile. While there are some that they are not really that high risk, they are just moderate. So when you know your risk tolerance, it helps you form your investment strategy. It also helps you know the kind of companies to invest in. So that's why it's important to know your risk tolerance.
So if we were to talk about budgeting, what's a good budget to set when you are starting to buy stocks? Now, I know that we're going to talk about currency. So let's just assume for the purpose of this interview that 50,000 Naira is the same as 50,000 francs. And that's equivalent to $100, right? Let's assume that that's like what for the purpose of this interview. How much do you think that we should start by investing? And also, how do we actually buy stocks?
Okay, so for the purpose of this interview, so we're going to use dollars. We can use dollars to as a denominator. So a minimum that I would recommend to get started is with between $20 to $50. So depending on the platform, you can get started with something lower, but I just recommend between $20 to $50. It's okay to get started with. And how to buy, once you have the right platform, the right brokerage app, you can just register, you sign up, you fund your account, look for this, type out the stocks you want to buy, and you purchase those stocks. So it's the process is very simple and easy to get started
Right.
with.
And for those in Nigeria, I know that you recommend ARREYB Invest.
Yes, Afro Investor are for those in Nigeria. So it helps you to invest in Nigerian stocks, and for US stocks, I recommend Optimus to
Optimal.
get started. Yes, Optimus by Afro Investor. But there are also other platforms that you can make use of. But these are the two I do recommend.
I like where this is going. I like that you're like straight, direct, and just giving the right information. If we were to talk about a metrics, let's say that I was about to buy stocks from Meta, and Array is about to buy stocks in Meta. What should Array be looking at? What should be a good metrics of measurement or indicators that I should use to evaluate the financial health for Meta or the performance before I invest in their stocks?
Okay, so for every company listed on the stock exchange, their financials is publicly released. So you can get their financials, know how well they've grown over time. And depending on the industry would help you know the kind of information to look out for. For example, if you are investing in Tesla, Tesla is an electric vehicle company. So when you want to check how well Tesla is performing, you look at the deliveries they've made. Okay, what's the delivery they've made for this quarter? What was their expectation? How many cars have they delivered over time? So that's one of the things you look at. So for Meta, they don't deliver anything, so you will not use the same metric. But
Metrics.
for Tesla, it's kind of unique. So that will help you to know how well the product is in demand. If
Right.
the number of deliveries are reducing per time, you would know that okay, there's likely a decline in demand for Tesla
Yeah.
products. But if you see that their deliveries are getting higher over time, like, oh wow, there's much demand for that product, you need to consider buying them. So those are the things you look out for. So for Meta, so example, can a Meta now, one of the things you look at apart from their revenue and the profit, you look at the average daily users, because Meta is like a social media platform. So in a way, their metric are kind of different depending on the industry. For Tesla, you look at number of deliveries for car. For Meta, you look at the
Ad
daily
revenue.
average users. Then for company like Microsoft, you look at their what's the revenue, what's the profit, which, because Microsoft has different businesses, so which business is giving much is contributing more to their revenue. So now we're in the world of AI and the like, so everybody's doing AI. So how well is how well is Microsoft delivering in the AI business? So there are different metrics depending on the company.
Right. You just talked about the different metrics depending on the company, and that brings me to asking the question: does that mean that some industries are preferable to invest in? For example, tech versus cars, or like automobile versus water. Do you have are there any favorite industries to invest in?
Okay, so when you look at the favorite industries to invest in, you look at what's in demand and what are investors looking at, what's the investment community looking at. So for US stocks, for example, tech is the dominant industry. So you can't say you are investing in US stocks and you don't have any tech-based stock. You are not investing in AI. You are not investing in electric vehicle. Those are the dominant. So you can't say you are investing in the US stocks and you are going to buy banking stocks. Not like banking stocks are not doing well. They are doing well, but that's not like the attractive industry to look at. So for each country, so there are some stocks that are really, really attractive. For example, in Nigerian stocks, the banks are the most attractive. So there are no much tech companies in Nigeria. So say you're investing in tech. There are no electric vehicle companies in Nigeria, so you can't say. So each country has a peculiar industry that is active.
Right. So the idea is to look at the country where you're investing, which, by the way, I think that for those who are going to be watching this, mainly or predominantly Cameroonians, Nigerians, the idea is to invest abroad as well so that you can
Yes.
make big money. Yeah. So it's kind of, okay, we're going for. So that means that if I'm going for the US, I'm going for the tech stocks for sure.
Yes. Yeah.
So talk to me like I'm a 5-year-old. If I was to start investing, how do you think? What strategies do you think I could use, or I could think about so that I mitigate risks and I preserve capital in general?
So for this aspect, in terms of strategies, it kind of tallies with what we've been discussing about. The first thing is to know your risk tolerance.
Right.
When you understand your risk tolerance, then you should invest in companies that are stable. Yeah, you should
Right.
invest in the solid company. So because there's that tendency for people to say, okay, let me invest in the next big thing. Let me invest in the companies that are unknown, so that by the time they blow, I'll be rich. So those kind of things happen, but the odds are very minimal.
Yeah.
So for example, people like when Tesla was still $5, you should have invested in it. When Apple was still $2, you should have invested in it. Yes, why that is correct. So you need to understand the full text context. For
Yeah.
every Apple company that
They
for every
might
Apple.
have been 200-300 that failed. Yeah.
Exactly, that's the point I'm going to. So for everyone that did well, that blew up, there are many others that didn't do well. So even social media platforms back in the days, there was i5, there was MySpace, all those companies. So now they are not. They don't. Some have even been acquired. They are not in the picture now. So if they were public and you say, okay, let me invest in them, but now most likely you would have lost some money, most likely. So I would recommend you go as a beginner, getting started, go for the trusted companies, go for the stable companies, Go for the companies that have solid track record of growth. Then when you are now a pro and you know how to navigate your way, then you can also, okay, you can make some risky bets. That's where risk tolerance comes in. That, okay, let me just take this risk. If it goes south, I'm okay. Can take some risky bet and, okay, can I identify the next gem? Can I identify the next big thing and just take a risk? If it goes on well, all well and good. If I lose my money, I'm still okay. So that's how you can go about it.
Yeah, I'm really finding this very helpful, and I think that for those who are watching this, it's really going to help them. Let's talk about long-term versus short-term investment. How should I approach that? What do you think are the advantages of each, or if advantages or disadvantages?
Okay, so for short-term and long-term investments, the advantage of short-term is, for short-term you are focusing more on trading. So there's trading and there's investing. So when you are trading, you are conscious of price movements. You are trying to take advantage of price movements, and to get the best out of trading, you need to do with chart analysis, technical analysis, and the likes. But for long-term investments, you are interested in the growth of the company, that irrespective of price, as long as this company is solid, they are still generating revenue, I'll be good over time. So whichever one to go for, it all depends on your investment strategy. Can either be a short term or a long term, depending on you. But it's generally advised that you should invest for the long term, because over time, with despite irrespective of the volatility, a solid company would always weather the storm and improve over time. So it helps you to edge against volatility and price movements and the likes.
Right. And I remember you talked about, you've just talked about the interest in it. And in one of our conversations, you equally talked about getting interest in both ways from stocks. You talked about dividends, and was it just the general interest? How does that work?
Capital appreciation. So dividends is when shareholders are paid part of the profits from the company. So it's like a way of rewarding shareholders for investing in the company. So for capital appreciation, you are just taking advantage of growth in the value of the stock. So you bought a stock at, let's say, $5, and it has grown to $10. That's price that price difference, so you can profit from it. So there are two ways to profit. So some persons, they prefer, okay, they are dividend investors, they prefer buying stocks that pay out dividends over time, while some, they prefer that, nah, I'm not really a dividend person, I don't have all the money in the world to get quality dividends. Let me just start with capital appreciation. So whichever way is fine. Like I said, and I'll keep repeating, depends on your risk tolerance and your investment strategy. This will determine the direction to go.
Is there ever a stock where you buy and you make like 100% gain? Is there something like that? Does that happen?
Absolutely. As a matter of fact, there's a stock that I have currently, Nigerian-based stock. It has gained over 100%, and I bought it this January.
Before you continue to watch the rest of this episode, here's what I want you to say.
If I am to rate Smart Club, I'm going to rate it a 9.5 on 10. I'm only taking that 0.5 because perfection leaves no room for development.
He's known for his expertise and innovative problem-solving skills.
Arrey is so practical at what he does.
Hello, this is Flora from the Smart Club.
I joined the Smart Club because I wanted to acquire more skills.
I wanted to acquire more knowledge and skills.
The Smart Club gives you an opportunity to have a one-on-one talk with ARREYB.
It is very innovative.
I have an agile way of thinking now.
We learned a lot, becoming T-shaped, content creation.
These are friends who joined the Smart Club and have been building the skills with us for the last couple of years. Maybe you're asking yourself right now, Arrey, what's Smart Club all about? The Smart Club is my private mentorship club that I built for friends who want to master a high-income digital marketing skill. Whether your goal is to build your personal brand, become a freelancer, or you want to get a job in digital marketing, the Smart Club is the right place for you. Registration has officially opened for the next batch of students. If this sounds like something that you'll be interested in, please don't hesitate to check out the link in the description and join us and build your digital marketing skill.
Ooh.
And that's gained over, as at last I check, it is 113%. So it's really, really possible. But what I would say is that don't be on the lookout for 100%, because that can be, so people like, I want to look for the stock that will give me 100%, that will give me 200%. Why that happens, you don't focus on that, because it's not every time you see 100% or 200%. So it's not every company that, so it depends on market dynamics at play per time. So if you are always on the lookout for 100%, 200%, you would want to take some risky bets that may go south. So the most important thing is that look for solid companies that would continue to grow over time. So that's it. Because if every investment is, most people even go for fixed income, fixed asset investments. Those are fixed. You don't just see, if it is just easy for you to just invest in something and you see 200, 300%. If that is the case, everybody will be a Dangote that is rich. Everybody will be Elon
Right.
Musk. You just can borrow borrow money from all your village people and the legs. Pack maybe $10,000 or $20,000. So yeah, put it here and you set it. So that doesn't happen. Investment is not magic. It's not dubious means. So in as much as those percentage are possible, that should not be what you should be looking out for. Look out
Right.
for investing in solid companies, and if along the line those companies grow to the extent of giving you over 100%, 200%, all well and good, but that should not be your major focus.
And at that point where you're making 100% gain on the stocks you have bought, are you quickly selling them out, or are you just hoarding them? Like you're just still keeping because you're waiting for it to increase? What do you advise at that point?
So what I advise is two ways. One, it depends on your investment strategy. Two, depends on the company. If the company is solid enough and it has given 100%, it can as well give 1000%. If it is solid enough, so you just keep it there, keep on investing, keep on piling it up, keep on stacking. And Tesla has done over 1000% in the last 5 years. Yeah, 5 to 10 years, it has done over 1000%. Nvidia, it has done over 500%. And like, so a company that gives you 100%, that is solid enough with good track record, it can give you 1000%. But how soon it gives that 1000% is not certain, but over time. So the idea is to just, as long as there's nothing fundamentally wrong with that company, keep on investing. Because like what my mentor would say, you would need more money in the future than you need now. So just keep stacking it up, just keep stacking it up. And when it's the right time to pull out your funds, you by yourself, you would know that, okay, this has done so much. I can, perhaps maybe you find an investment opportunity, or you find something that, okay, something you can invest in, okay, pull out funds from here, use that. But as long as there's nothing yet and you have no reason to, the company is not defaulting or is still on growing, let something that is growing keep on growing. So basically that's just it.
Talk to me about where you have your gut feeling from when it comes to buying stocks. Is there any part of stocks that involves your gut feeling and your, I don't know if I should say, your spirit, your intuition, or I don't know how to ask this question, but
Yeah.
because I know that you guys talk a lot about your gut feeling, your intuition, as well as you talk about having patience, but you also talk about following like the trends and understanding what's happening with the company you're investing in. Just how do those play together?
Okay, so gut feeling is applicable to everything in life, not just investment. Even making money, even finding a partner, you
Right.
might just have that gut feeling that this is just the right person for me. So it's applicable to everything. Gut feeling is there. So perfect example, that scenario that you asked, that when you've done 100%, do you still keep it, or do you, at times gut feeling might just put in play, might just have this intuition that just sell this thing. You feel that yes, this company will still grow, but just sell it, and you just try to sell it. And at times you might want to sell and you're like, just keep it. So gut feeling, intuition, it's applicable to life in general, not just investment. So when that moment comes, just follow your mind, follow your spirit, and you'll be good.
Right. How do you get more information about all of these stocks and companies? How do you follow the trends and making sure that you're keeping up?
Okay, so for keeping up with the trends, you listen to, you watch, not like you watch per se, but you keep updated with websites. So there's some website that gives information of these companies. For international websites, for example, Yahoo Finance, they give updates on the stock market, on companies that are listed. CNBC. For Nigerian stocks, there's a website, Nairametrics. They keep updates on the economy, on companies. So once you pay attention, you would know, you'd get the right information that you need. So everything is public. Everything is public. So follow the websites, you can also track the stock exchange websites, and just any company that you're interested in, you would definitely know where to get those information. So for example, if you are interested in a particular lady that's going to date or be in a relation, definitely you would know where the person lives. So someone who cannot say that, okay, how do you get information on that? Yeah, no one that is interested in that lady. So definitely you would know where to get the information. You will know where she stay, where she lives, her movements. You'll be able to keep track because you are interested in that person. So whatever stock that you're interested in, you definitely know where to get more information concerning it.
That's such a good example. I swear. I'm not going anyone give that. Okay. I want to ask you a couple of questions, which will require you just to give like a fast one, because I want us to talk a bit about more on personal finance, and because I think that there's just quite a lot that we could learn from you. So, recommended stocks. I know you've talked about Apple, you've talked about Meta. Well, no, you didn't talk about Meta. You talked about Apple. I think that's, and then you talked about Tesla. I think so.
Yeah. So those are just examples that I just gave.
Okay. So, are there any recommended stocks that you're going to recommend to the audience?
So for recommended stocks, I would not be direct. So I'll just talk about what to look out for. So basically, like I said earlier on, for US stocks, just look out for tech stocks. What are the dominant tech stocks and the likes? And for Nigerian stock, I've given an example. Look out for banking stocks. So these are the resilient sectors. These are industries that are really attractive. So once you go there, you find out the top and the dominant ones. So
right, and definitely we're going to talk about this at the end, which for those who would love to attend the Be the Stock Master Boss, which is coming up. But again, yes, we're going to talk about it. I'm just, for those who are watching this, so you can stay to the end and get more information on how to learn from Nathanael. Let me ask you, Nathanael, these ones are just really, really quick ones. Okay. Bull versus bear market, what does that mean in stocks?
Okay, for bull market is a market that is going up. Let's just use the layman language. A positive market that, price of things are going up. While bear market, price of things are going down. Is a pessimistic market. People want to sell off. So basically, bull is positive, bear is negative.
Right. What are blue chip stocks?
The blue chip stocks are solid companies, solid stocks that the top ones, the dominant ones, the most attractive ones, the most valuable ones.
Right. And then we talked about going long versus going short. You said going long should be the goal when you're investing.
Yes.
Okay. Dividends versus profits. You said go for profits, because not all companies will give you dividends. If it comes, okay. If it does not come, I think that's what you said.
Yeah.
All right. Active versus passive investing, which is better?
You start with active, then over time you move to passive.
Okay.
Yeah.
So I wanted us to branch a little into personal finance. And I'll start it off by asking this way. We'll transition from the stock side right into maybe the finance habits and everything. Let's say that I have $1,000 in my account right now. What percentage would you advise to at least toss that out into the stocks, or to put into stocks?
Okay, so do you mean from the money that you saved, or
yes, from my savings? Yes.
Okay, from your savings, you saved $1,000. Okay, so if you saved $1,000, it's like I said, stock market is an investment vehicle. So if that is the only money that you have, obviously you shouldn't just put everything in the stock market, because stock market is volatile. It can be unpredictable at times. So you protect yourself. So personally, I don't work with percentage. I don't work with percentage. I'm not that rigid. I just give that flexibility that, okay, have some investments in stocks, have some investments in fixed income, have some investment that's just locked in savings for emergency funds and the like. So
Yeah.
the most important thing is to keep growing each percentage, is to keep growing each. So you have investments in stocks, keep increasing
Growing
the
that.
amount. You have some emergency funds and savings, keep investing, keep adding it up. So personally, I don't work with percentage. The main thing is that I ensure that this continues to grow. So I have some emergency savings. I have some investments in fixed income or real estate, depending, or other alternative investments. I have some in stocks. So month by month, as you make money, as you grow your money, so you just keep on adding it over time, planting it over time. So once you do that, personally, I don't think you'll be bothered about percentage. So the most important that you see now, okay, you previously had $200 in your savings, and maybe after a year it has already grown to $500 or $700. That's progress. Who cares whether you were doing 20% or 30%? The most important thing that where you started from to where you are, it has increased. There's progress. Everybody's happy. Nobody cares about percentage. So that's just my um perception about it.
And that's such a good way to look at it, because for me, so initially before this conversation, for me, I'd always thought, oh, okay, let's say that I'm spending $1,000 every month. I would say to myself, okay, I need to have, which this is my personal rule. I'm like, I need to have at least 12 times the amount as a safety net somewhere. And then the rest of the money. So even if, regardless of what's happening, my bank account does not go less than that. Let's say that I'm sorry, my bank account will not go less than that. And then the rest of it, I know that, okay, I'm putting to, but I always look at it like from percentage. It's until you now explain, you're like, just make sure everything is growing. Now it's making much sense to me.
I think that is just the most important thing, because, for example, me, for a monthly basis, so maybe once you've sorted out your basic expenses for the month, or your expenses and everything, you can just put the rest. So at times you're like, okay, this month you've added to your stock market portfolio. The next month you can decide that, okay, I did stock market last month, let me add to my savings for this month. Next month you can be like, okay, let me add. So depending on how much you've made and what is available to save, or you can decide that, okay, this is $500, let me just put it 250 with that. The next month, like, okay, I've already sorted this out, let me sort this. The most important thing that every aspect is growing. If every aspect is growing, I don't think you should bother much about. So the most important thing is that you are disciplined and you ensure that you are doing this religiously. Because if you try to be too rigid that it must be 20%, must be this, I just prefer that the most important, you focus that it is growing. As long as you can be disciplined to that, who cares? Because things change, price of things become, for example, in Nigeria, price of goods, price of things are going up on a rapid basis. They are going up regularly. So if you are just too rigid, at times life happens and you just need to readjust. The most important, because it's not like you are in exam that you are submitting one report to the public that, okay, well, the public this month. The most important thing that you ensure that you are growing yourself. Once that is settled, the most important is that, that at the end of the day, you have some good investments, you have good savings, and whenever you need those funds, you can access it and use it for whatever the need is. That's the most important.
Yeah. What you're saying is challenging me to think, because initially I had worked on percentages for myself. For example, I know that at the end of every month, X and X has to go into my savings. And now at the end of every month, this is what I have to do. But I never thought about it like, oh, I have to make sure that all these different streams are growing. So yes, thank you for saying that, because you're giving me something to think about. How do you think one can start building a good saving habit for someone who's watching this right now and it's like, I try to save, but I can't? Nathaniel, how do I even try to do this? And regardless of how much money you're making, by the way, which I don't also think that it's so difficult for anyone to save if they at least start to build a discipline. But let you as the expert at least share that.
Okay, so interestingly, I had this question asked to me earlier on today when I went for a hangout. So the first thing to do is that when the stage at which somebody stop giving excuses, the person is halfway towards solving. So people will say, I find it difficult. Just quit those excuses. Just quit those excuses. They may say, okay, I want to do this. How should I? Then, okay, you are now ready to get started. The most important savings is habit. So it's not really much about how much you've saved. It's about the discipline, the consistency to ensure that you always keep something out of whatever you make, out of everything that comes in. You don't spend everything. You It's a habit. So with time, as your income continues to grow, that habit is building up. So first off, just ensure that you have the habit of saving something, even if it is $1, so that something is being saved. Then the next thing to look at is how to increase your income, because obviously if your income is very low, it becomes more challenging for you to save. I'm going to be real and to be realistic that yes, if your income is quite low, it's really challenging for you to save, because you need to pay bills, you need to feed and the likes. But the most important thing, ensure that you are building a habit. So it's more about the habit. So once you are ensure that okay, that habit is there, you are saving something, then the next thing is that okay, how do you intentionally grow your income? Because when you are growing your income, it's more comfortable. So it's not that it is until you've grown your income before you can do that. Build the habit even when your income is low, even when it is difficult. $1, even if it's in a month that you save $1, at least something is in your account being saved. Then when your income is now growing, that habit gradually is growing, that okay, before you are making X amount, you are saving only $1. Now you are making X amount, you are now saving $5. There's a growth, there's an improvement. I remember I said it's not really about the percentage. Ensure that what you are doing is growing. So if you were saving $1 before and now you are saving $5, you've grown. You are saving $5 now. With time, you are now saving $10, $20. You've grown. That's progress. It will get to a stage that you can comfortably save $100, $200, and you're not feeling anything. The most important is that you are building that habit and you are seeing consistency in that habit.
Before you continue to watch the rest of this episode, I've got some great news. Whether your goal is to build your personal brand, to become a freelancer, or to get a job in digital marketing, we've helped hundreds of people, and your time to join the Smart Club is right now. Down below, we're going to put the link regardless of where you are, your stage, whether you're tech or not. The Smart Club is a place for you. So the next batch of the Smart Club is here, and we're officially accepting club members. If this sounds like something that will be interesting to you, please make sure to check the link down in the description below so that you can join the next batch of students. So the best part of all this, whether you're watching this and you go, Arrey, but the Smart Club might not necessarily be for me. I think you have family members, friends, relatives who you want to upskill themselves. This is going to be the right place for them to upskill. So check out the Smart Club. Make sure to recommend the Smart Club to friends, family members, or those people who might find this very helpful.
Right. I think what you're saying is very important. It reminds me of something. So I picked this out from my table because about 6 years ago, I decided that I was always going to have disposable cash. And so I started out with me keeping 5,000 francs CFA, right? So when I kept 5,000 francs CFA, I decided I was never going to do it, and I didn't touch that money for about 3-4 years. But what I did was that, well, it wasn't money that I even had to use for, but I made sure that I was always on my table, and then every month I was increasing it. So at the point of talking to you right now, this is literally $1,000 that I've not touched, and I do not count in my finance. So which means that doing that about 6 years right till now, I've had about $1,000 disposable income that I've not touched. I don't count in my finance, and it's just there because I love to have money in the house, and I've not used this money for over 6 years. So if even I travel to a different country, I change into the currency, and I think that really helps me. So what you're saying, it's very, 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 very important. You posted something on Facebook that I wanted us to really talk about, and that struck me very hard. And you talked about about money habits, and you said you were writing about 7 simple money habits that you should practice consistently. And the very first thing struck me when you said always be comfortable talking about money, because I felt like that was like such a big one. Why is that so important? Because I know I've talked to friends, they're like, oh no, let's not talk about money, oh it's so expensive, is this? I'm like, no, I'm the guy who goes, give me the bill, if I can't afford it, I'll let you know, and you'll not kill me. So why is that so important?
Okay, it's because it's a mindset thing. Once you're comfortable talking about money, it makes it easier for you. So like yeah, you said people say, let's not talk about money, like money, because the world revolves around money. That's just it. That is the reality. There's nothing that, even if you're a preacher, you need money. If your church is broke, it will be difficult for you to preach about Jesus. So you even need money to even spread Jesus. Salvation is free, but you need money to spread it to people. Salvation is free, but you need money. You want to host concerts, you want to host outreaches, church programs. It's money. It is money that is needed. So money, the world revolves around money. So whether we like it or not, everything is all about money. The most important thing, and I think where people always talk about that, don't let us talk about money. And I get that aspect is that don't place money over relationships. Don't place money over values, over integrity, over honesty. So those values should not be placed over money. But once those values are there, you are not placing it over money. Please talk about money. As long as you are not betraying your friend for money, you are not backbiting, you are not doing all those illicit things just for money. As long as, yes, you are being truthful, you are being honest, you have the right values, be comfortable talking about money. Because if you are talking about millions every time, it's easier for you to attract it.
Yeah.
So if you are not comfortable talking about money, even when those money starts coming, even the money itself will know that this is not my habitat. I should not be in this person's life. It doesn't know about me. The money will move to someone that is welcome, that yes, we're talking about the millions, now the million is here, let's go poly. So you need to be comfortable talking about money.
Right. Totally agree. Because I think that it sets the precedence. It starts all in the mind. When you talk about it repeatedly, it's like one time I was having fun. I called a company that sells private jets, and I said to them, I'm not there yet, but I just wanted to make inquiries.
That's really it. So even if you can, I think I would even do it. Just make inquiries. How much is private jets to Abuja? I want to book. They tell you, okay, yes. The best thing is that if you've already made the inquiries and you know about it, so even if yes, you don't have the money yet, at least you've made the inquiries. And because it's not everybody that can just call a private jet company and say, I want to book a flight. Nobody will do that. So that you even have that courage to even do it, it's a win for you. So yes, always be comfortable talking about money. Always.
I was just like, hello, ma'am. My name is Arrey. Actually, what I want to ask right now it's not very urgent, but I just thought, would you be down to give me some information about some of your jets? It's like, oh, yeah, sure. So what do you want to know? I'm like, okay, because quite honestly, it's not something I'm looking to get this year. However, I wanted to make inquiries and keep. She's like, yeah, sure. And then we spoke for about 15 minutes. Wow. Asked my questions, and I was writing down. Don't know when I'll get the jet. However, let me ask the questions. I think that's important. Anyway, man, talk to me about some of your mentorships. I know that you almost every month, I think it's monthly, you're organizing Be the Stock Market Boss. And right now, this is the 7.0 version. And you've trained at least 600 people, or getting to over 600 people right now. Talk to me about Be the Stock, about the sessions and what it looks like.
Okay, so like you said, Be the Stock Market Boss is my not really my flagship training program, but it's like my major training program that I do for beginners. So someone that wants to get started in the stock market. So it's something that I run monthly. So there are different editions. So I just finished one, the 6.0 last month. So the 7.0 is happening April 29th and 30th. So it's a 2-day class this month over Zoom. So it's a beginner's training class for someone who want to get started with investing in the stock market. That's the class they should attend. Either you don't know about it before, or you've just heard about the stock market but you want to actively get started. That's the class I would recommend you sign up for. So with that, you can get started and it's easier to move.
Right. And by the way, that was how I got in contact with Nathanael. So when I followed him for a while, for those who are watching this, I followed for a while, and because I love to spend on my things, I reached out to you and I said, hey, look, I'd love to have you on the podcast, but first let me attend the class because I wanted to get into investing. I have attended, and by the way, for those who are watching this, I attended the class. I bought 2 other tickets for 2 other people, 2 other friends, which we attended all together. And we all loved the class and gained a lot from it. So there's going to be a link down below for you to reach out to Nathanael and get yourself enrolled. I trust that's going to give you the basics of everything that you need to invest. But I will not let you go without asking you one question, which I think maybe nobody has asked you on an interview before. Why get married early?
You really got me on the spot. Okay. Honestly, I wasn't expecting that question at all. Okay. Why I got married early? Well, uh, okay, let me just compose myself and try to answer. Okay, I I thought I was dating and I knew she was the right person for me to get married to. So I felt there was no point delaying. There was no point just unnecessarily procrastinating. Like I had the person, I had the job I was doing, so why not? I want to get married. She wants to get married. We want to get married. So why not
Why
do
not?
it? So we don't need to wait until we are over 30, 40 before we get married. So the younger the better.
Right. And I appreciate your courage, man. When I saw it, I was
Yeah.
just like, yeah, that's bold and that's good. The last question we always ask every guest, I don't want to keep you so long. I know that you have a lot to do. But the last question we always ask every guest is, when all is said and done, how do you want to be remembered as Nathaniel? Well, what will you answer me?
That's a very solid question. So after all is said and done, I want to be remembered as someone who helped people get better financially. So that's the most important thing because people struggle financially generally. People struggle. Managers struggle because of finance. People's self-esteem can be down because of finance. So I want to be remembered. So many times I go for programs, I meet people that they've taken my training program before. I've never met them before. And they were like, wow, your content online really helps me. It challenges me. I know so many people who have started their investment journey just because of me. Yes, they are not millionaires yet, but the fact that they were able to start the investment journey because of me, that's something really rewarding. I know many who got their savings habits improved. They got to be better financially just because of me. So that's something really important. So I just want to remember that someone who helped people find themselves financially because once you're able to sort yourself out financially, there
Yeah,
are some problems or there are some challenges that will be automatically
90%.
solved. So yeah.
Yeah,
So money is not everything, yes, but at the same time, money makes everything work. So money is
yeah,
not everything, but it makes everything work. So once you have money, once you're able to have a good financial life, it's easier. It's easier to do things. It's easier to have a better life. It's easier to give your spouse a better life. It's easier to give your children a better life if you have the resources. So and if you know how to make the resources useful for you. So that's something
sure.
I would like to remember.
Totally agree. Amanda, I want to thank you very much for your insightful, just that expertise that you brought to the table. I really, really did enjoy. This was very helpful for me, and I trust it's going to be helpful to everyone. And also, for those who are watching this, there are going to be links down below this video so that you can join Be the Stock Market Boss, the very next edition that is coming up. And Nathaniel, once again, thank you for doing this. I really do appreciate your time, and I appreciate you
Thank you very
being
much,
very
Arrey.
open to share.
Yeah,
Yeah.
thank you very much.
If you just enjoyed this episode, the chances are that you're going to enjoy other amazing episodes that we've recorded, so you can check that out somewhere around this video. Before you go, please make sure you check our 3 boxes. First things first, please make sure to hit the subscribe or the follow button down below because the more we grow, the bigger guests we can approach on this platform and the more value we can bring to you here on the podcast. Second, a lot of friends always reach out to me and say something like, hey, Arrey, I really did enjoy this particular segment of this episode. Pick up your phone and send this to a friend and say, hey, check this out between 10 to 15 minutes. There's something very important I'd love you to see. Number 3, please make sure to check out the links in the description for very helpful resources. You're going to find the link to join the Smart Club, which is my private mentorship club for friends who want to learn and master a high-income digital marketing skill. Whether your goal is to build your personal brand, become a freelancer, or get a job in digital marketing, the Smart Club is going to be the right place for you. So before you go, please make sure to tick those 3 boxes. Like I always say, my friends, cheers to many more years of shamelessly living and crazily excelling in passion and purpose. And I'll speak to you in the next episode.